Good morning, good morning, good morning. My name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. And for 16 years, we've been teaching this message on how to leverage other people's money so that we can make more money and stop spending a lot of interest that we do not have to pay. Listen, folks, we promote interest cancellation so that we can leverage other people's money. Today, we're going to be talking about let's think like a bank. And why is that going to be important? Why is that important? Because we are taught to think like consumers, and consumers are encouraged to spend and not save. Encouraged to spend and not save. Encouraged to, when it comes to borrowing money, we are encouraged to borrow a lot of it. But most importantly, we're encouraged to pay a lot of interest on that money. Now, how are we encouraged to do that? It's funny because we're encouraged to spend a lot of interest by making us believe we're saving interest. Wow. Making us believe that we're doing the right thing when in fact we're doing something that makes somebody else rich. So if you want to come up to the stage this morning, come on up. Let's talk about it. Let's ask your questions. And I'm sharing it in the hallway. I'm also saying good morning to everyone. Let me see. Good morning in the chat. All right. Put a little sunshine in there. Good morning, everyone. Listen, come on up to the stage, ask your questions, make your comments, and let's find out why in the world are we not doing better when it comes to borrowing money. So first of all, let's start with this. In your city, in your town, which are the biggest buildings downtown? Which are the biggest buildings downtown? Anybody? Put it in the chat. If you don't want to come to the stage, which are the largest buildings downtown? Wherever you live. Come on, talk to me. Put it in the chat. Biggest buildings downtown, in your town. All right, Donna says the banks. Now, if the banks are the biggest buildings downtown, here's what I want you to believe. Here's what I want you to understand. We are taught to believe this, a lot of us, because I run into it all the time. Borrowing money is a mistake. If you should be paying cash for everything. Save up your money and buy things with cash. Cash is king. So if that's what you're being told, not to use credit, there's something wrong with credit. There's a guy in Nashville, Tennessee that says we shouldn't be using credit. He wants to drive your credit score to zero. He thinks your credit score should be zero. Don't use money like that at all. You know, if that's the case, now I have been taught that success leaves clues. What do you say, Donna? What do you say, Credit Goddess? Does success leave clues?
Yes, it does.
Right? And so if success leaves clues, then we should be following in the footsteps of someone else who's successful. If the largest buildings downtown are banks, let me tell you something about borrowing money, everybody. That's all banks do. They're the biggest borrowers in town, but they have the largest buildings downtown. What are they doing? What are they doing right? What are they doing that we could learn something from? They are borrowing money from all of us. They are investing that money or lending it out to get a huge profit. But they're using our resources, which means they have to enter into a contract with us to borrow our money. And that contract says they're going to pay us interest on the use of our money. Let me ask you this, everybody. the amount of money that they make and the amount of money that they pay us to use our money to make that money, is that contract anywhere close to being fair?
Absolutely not.
What do you mean, Donna? What do you mean by that?
No, because they give you pretty much penny on your dollar when they borrow your money, but then they when you do for example a mortgage or just a credit card, it's like 19%, 28%, 4 point whatever percent on a mortgage. And when they borrow, you put a $10,000 in, after they have leveraged and have loaned out that money to about 100,000, you only get $100 on that if you get so much. So it's not fair at all.
So if what they're doing is borrowing money, and what I'm hearing is that they're making a huge profit on that borrowed money, and then they turn around and pay us pennies on the dollar for the use of that money, then what are the clues that they're leaving behind, Miss Donna? What are the or credit goddess? What are the clues that they're leaving behind then? Is what should we be doing? Should we be should we keep the same mindset about money? Should we be keeping the same mindset that borrowing money is a bad thing? That there's something wrong with it? That if you're in a position where you have to borrow money, somehow you're substandard, you're not in the right place mentally, or financially, or your education on finances is off some way.
I would say your education on finance is, yes. It's not that it's off, but you need education on finance because you're gonna need to, because there is that money, the for your mortgage, whatever it is. However, the education is needed, and this is why we are here. So we're going to be learning how to save on the interest cost, what they are going to charge us to borrow that money, and at the end we're not going to be sitting 25 years paying a mortgage when it could be done in a quarter of that time. Like, I mean, you have 30 how much months you have to pay that mortgage over that lifetime. But then here we're getting the education now, it has to how to save on the cost of borrowing that money over the lifetime of the mortgage.
So you're saying the banks have found a way to save on the cost of borrowing money.
No, not the bank. We are now learning how to save.
Well, I know that part, but I'm just
Oh,
saying, what are the lessons that we should be learning from the bank? I mean,
okay.
this is what I'm talking about now. We need to learn how to think like a bank. So, what are the lessons that we should be learning from the bank here? Can somebody write down what they believe, what we should be learning from the banks, so that we can level up financially? What are they doing that we should be doing as well? Anybody? Miss Donna, what do you think?
How to borrow their money and pay them little to nothing, like what they've done to us.
Listen, what's good for the goose is good for the
It's good
gander.
for the gander. Correct.
So we should learn how to borrow their money, make a big old benefit or profit with it, and pay them pennies on the dollar for the use of their money. Listen, does that make sense, everybody? Listen, if you believe that makes sense. So, let's see. Ama, I'm sorry, Ahima says exactly. All right. Kenobi says shalom and good morning. Good morning, Kenobi. She's watching us here on YouTube. Thank you very much. But yes, exactly. That's what we should be doing. How can we think about and why don't we think that way, folks? Why don't we think that way? Where? Good morning, Jeremiah Sams. He's also watching us on YouTube. Why don't we think that way? Why don't we think like banks? Anybody? Do you have any idea as to why? Any theories? Anybody? Why don't we think like banks? Huh?
Be- because Heights, we were not trained, like basically our education over years, just like how you said, someone in Nashville said you should not use credit card, you should keep it at zero. That's how a lot of us have been trained, is as you alluded to in your preamble, is that cash is king. So we did not know anything about, we just think, okay, the bank is there to lend you some money and you're going to pay over this time. We did not know that there are other ways in order to do the reverse psychology on the bank. So, it is with us getting this, it's like, we got to jump in and take action.
Credit goddess, you were going to say something here.
I think we don't think like the banks because of the fear. The fear of owing. That's what I hear a lot from people. So if we're afraid to if we're afraid to borrow because of the fact that we owe someone, we wouldn't have we we wouldn't have the ability to even think in advance, or having advanced tactics, or applying advanced tactics, because in order for you to apply those advanced tactics, you have to actually get in the game, right? Practice, learn, get into the habit of things. And once you learn, okay, well, this didn't work, and okay, so I'm going to try this. And especially too, if you have the knowledge, like you're teaching right now you can start applying those the tactics that you're learning. So if you have never experienced, and you stay in the mindset that you're in right now, you're afraid to borrow because you don't want to owe. That's the reason why a lot of us don't have the opportunity to actually think like the bank. You have to actually get in the game to start thinking like a winner.
That's right. That's right. That's right. So let's talk about that for just a second. Fear. Now, are the effects of fear, are they real? The effects of fear, what fear does to us.
Nope, it's not real.
I'm sorry?
Nope, it's not real.
What do you
What they
mean?
say, the acronym stands for false evidence appearing real.
So it appears real, but the fear that we feel, is it rational or irrational?
It's irrational.
It's irrational fear. So we are taught to fear something we should be embracing. But because we fear it, what's going to be the result of that fear?
Not doing it at all.
Or doing it poorly.
Yeah, that too. Yeah.
Okay? Not doing it at all or doing it poorly because of the fear that has been implanted. We won't try to learn how to do it right. Credit guys, let me ask you something, because you are Rose, you are in the business of helping people to level up their credit. You're a credit improvement strategist. So
Yes.
what would you over the years, why don't most people have a great credit profile? What is that contributes most to that mindset? What do you think?
Well, it could be two things. Not having good credit means that you just never established one. They will call those folks no credit. But bad credit is when you're mismanaging your funds, right? Because every month you get a new progress report of how well you have managed your accounts. And these accounts are from creditors and lenders that you're doing business with, whether it's a credit card, you've built that trust that they lend you according to your to the data that they receive, which is from your credit report, your extended credit, and how well you use your credit, or your credit cards, is what's going to determine a score. And what contributes to the bad credit score is when people are over leveraging, when they're over leveraging, because we're talking about two variables. We're talking about credit, and then we're also talking about your income as well. Over leveraging is when you are spending more than what you have. And when you're over leveraged and when it's time to pay the bill and you're short, is either you're going to make the minimum payment or you're not going to make a payment at all. And a late payment, or I would say your payment history, makes up the largest part of your credit, which is 192.5 points. One late payment, you can drop a good 110 points from one late payment. And it takes 6 to 9 months to rebound from that late payment. And when you are late again, it drops your score even more. And it takes 3 years to rebound from two late payments and 7 years to rebound from three. And that three late payment consecutively result to a closed account. And that's why it takes 7 years to get that closed account removed off your credit. So that is what's affecting people the most, is when they're over leveraged. And I think when the folks that were over leveraged and their bad experience based on their mismanagement, and they shared that with others, is how the news spread about, oh, don't borrow because you don't want to owe nobody, or you don't want to pay double for what you're borrowing, which is interest rate. Oh, I don't want to pay extra just, for this one item. I might as well just pay cash. But, people that are spreading that type of information to others have no idea how it works. I would rather you go and research how it works. It's just like trying to operate a vehicle. So you got the keys to the car, you didn't read the manual, and you didn't get any training. You drove the car and you ran into a pole. So you're going to just tell everybody don't drive? Don't drive the car because you're going to crash. That just doesn't make any sense. Get some training, learn the manual, read the manual, so that way you can operate the machinery better. So it's the same concept when it comes to credit. So that's one of the two things. People are not building credibility, or they're mismanaging their funds.
Listen, folks, what did you just hear? What did you just hear? That because of someone else's bad experience, they are spreading fear that what they've experienced, no one should experience, so don't touch it at all. All right. Well, I guess the analogy that you said, well, because every now and then cars crash, that means no one should ever learn how to drive correctly. That no one
That's
should.
pretty much what it sounds like.
Nobody should
Yeah.
drive a car. Listen. Do you know something was in the news earlier this week? Something was in the news about a plane that was, I believe, going to Hawaii. Experienced some turbulence, and a lot of people got hurt because the plane fell. It didn't fall, but it lost altitude very quickly, so quickly that people hit the roof of the plane, hit the top of the plane. Okay, and they got head and neck injuries, and it was all sorts of things that had gone on. Now, how many times have you heard that even when there's no turbulence and you're sitting in your seat, what should you have on? Anybody? If you're sitting in your seat, what should you have
Your
on?
seatbelt.
Your
Your
seatbelt.
seatbelt.
Even if there's nothing happening, you should be in your seatbelt. Why is that,
Yeah.
Credit Goddess? Why should we be in our seatbelt even when nothing is going on?
To be prepared if anything was to happen.
Okay. Now, here's my next question. When the plane suddenly lost altitude, if everybody was buckled in their seat, would anybody have been hurt?
Nope.
How about that? How about that? See, folks, this is what we're talking about. We want to do things the right way and not let fear of doing it the wrong, somebody who did it the wrong way, let's not let fear rule your lives when it comes to borrowing. I got 3 shares in this room, and I think I did 2 of them. Let's go ahead and share this room and get people in here so that they can learn how to think like a bank and not let fear rule them when it comes to borrowing. How can we level up our lives? How can we do this through leveraging someone else's money? All right. Preparation, Kanabi says preparation is a real thing. She's watching us from YouTube, folks. She says also analysis paralysis happens from fear. And then she has a word play here on fear. Forget everything and rise. Forget everything and rise. That is what I tell my clients. That's what she tells her clients. Forget everything and rise. So, folks, I like that. I think right now we should be forgetting everything we've ever been taught about finances. Study the banks, see what they're doing, get a new idea of financial education, because I'm telling you, if borrowing money was wrong, banks would not be successful today. We wouldn't have a banking system if borrowing money was wrong. You have to learn how to do it the right way. Just because cars crash, that does not mean you should not learn how to drive and do it correctly. Just because other people get in financial trouble, let's not listen to them when they give us advice about debt. Let's learn how to do it correctly. All right, I still have 3 shares in here. Can I get a few more shares? Folks, we're going to be giving you out some game today. I'm going to be showing you some things online about how you should think like a bank and want to know. Go ahead and share it. If you're online, share. If you're in Clubhouse, share the room. Okay, I'm up to 5 shares now. Go ahead and share it. Let's get some people in here so that we can learn how all of this is done. I'm getting ready to, I'm going to put some things on the screen, and let me share the screen here, and we are going, let me see, I need to put this over here on this screen, I believe, and then share this. All right, so folks, here we go. How to pay off mortgages and all other debt in 7 years. That's the title of the room. But today we want to learn how to think like a bank. All right. And I've got some notes here I want to go over right now. And let me see here. Let's get this screen up and my notes that I've got for this morning's show. All right. So first of all, we have a certain mindset towards finances. Okay, we have a certain mindset towards finances, and I want to bring up. Let me get this. Let me take this back down, because first of all, I want to talk about our mindset that we have towards finances, and right now it's wrong. Our mindset is not correct. So we are going to get rid of this, close it out, and put up our, let me see here, new window, and we're going to put in cognitive dissonance. What does that mean? Cognitive dissonance. All right, so we're taking a look at that. Cognitive dissonance is the state of having inconsistent thoughts, beliefs, or attitudes, especially as relating to behavioral decisions and attitude change. All right, so right now, I'm talking to people several times a week. And what they're doing is they've been taught to think about their finances in a certain way. And it's my job to help them to think about their finances in a different way. Okay? Donna, Rose, has anybody ever come to you for advice on how to improve their financial situation? They had a mindset, and then when you were trying to teach them, they kept arguing for their current mindset.
Yes, I have.
Yes.
Listen, why are they coming to you for advice, but they're arguing for their current mindset?
It's I you know, okay, so I'm animated. It's
Okay.
like it's like you're trying to wake someone up. You know when someone is so comfortable in their sleep and you're trying to wake them up and they just wake up fighting? That's what it feels like when you're dealing with people that have this certain way of thinking and you're trying to wake them up. They get uncomfortable. They don't want to do it. So they fight with you to see if you can come up with a different angle instead of like exploring different options or asking if there's any other options if they're just uncomfortable doing it the way that you're instructing or coaching them to do. So it's a fight. It's a fight to have to deal with their current state and seeing and having them see it your way so that way they can gain success. um, it's just that they don't want to wake up. Ice, they don't want to wake
You
up.
know, I had just this past weekend, I had somebody who heard about the pill method. I've been in Huntsville, Alabama since 2008. And there are people out here who have heard about the pill method since 2008. And because of that, people who have talked to me about it and wondered about it, they had a certain mindset about debt and they kept their current mindset. A psychologist taught me about cognitive dissonance, meaning that when a person has a certain idea about anything, and especially here when we're talking about finances, they have a certain idea about finances. And Don, you're talking about doing something completely different, taking 30-year mortgages and paying them off in 7. Already, that's going against everything that they've ever been taught. You using your current budget and not having to make more money. Oh man, already they're feeling cognitive dissonance, even though you show them the math. So here's what happens, folks. Even when you show them evidence of what you're saying is true, and it goes against everything they've been taught, then a thing happens in their head called cognitive dissonance. And it's emotionally painful because now I have to switch from this old idea that I had that I thought was true, and now I'm seeing evidence that what I thought was true is actually not true. That means I now have to change my old attitude, and all of my actions that I based on that old attitude, they have to change too, to do this, to adopt this new attitude. And now I have to adopt new, a new way of living, a new way of doing things based on the new attitude. Now, here's the thing. I like the new attitude. Adopting new behaviors on the new attitude, I don't know where it's going to take me. Listen, it makes sense that it's going to help me. But do I know that it's going to help me? Do I have evidence that it has already helped me? No, because I was too embedded, too invested in the old mindset and the old behaviors. And because of that, now I have to change to get a even better result, but I don't know it's going to be a better result. That causes emotional pain for some people. And do you know how most people resolve that pain, Donna? How most people resolve that pain, Credit Goddess? How do most people resolve that pain? What do you think?
They don't make changes. They continue to stay in their comfort zone.
And do they feel better because they've made that decision?
Should I say they
Yeah.
feel better? They will feel better, but
Yes.
yeah, yes, they do feel better because yeah,
Yeah.
they ask you your opinion, you give them an honest one, you show it to them, but because of how they've been stuck in their way and basically what they've learned before, they don't make anything. They don't make any changes. Yeah.
They don't make the changes. And because they've said, listen, I've got this conflict going on. And the conflict is my old way of thinking versus the new way of thinking. And listen, I have been given evidence that this new way of thinking is going to be it. All right. But I'm afraid to change. Credit Goddess, you were going to say something.
Oh, no, no. No, they feel better. It's like, again, it's a fight. And if they win, what people, they just give that whoo, oh man, I thought I was gonna have to change. No, yeah, you have to make a change if you want to see different results. And when they say if you keep doing the same thing over and over again, uh that's insanity. Thinking that you're gonna get something different. But yeah, they
Exactly.
they feel comfortable, so yeah, they feel better to not make the change.
Listen, I had somebody tell me that now that they were introduced to what I was doing a few years ago. And do you know that I have hundreds and even thousands of people who have changed their idea, all right? And now they're out of debt. But those people who suffered from cognitive dissonance, who did not change, who stayed with their same idea, all right? They stayed with their same idea, and now they're coming back. Now they're coming back to me and saying, I have regrets. I should have listened back then, because you know what? For whatever reason, they were saying that I was fearful. I talked to some other people. They gave me their financial advice. And listen, folks, when you do that, you're getting financial advice from people who are as broke as two left shoes. Why should you be listening to them? Okay. So here's what else is happening. That to engage this new process and to learn from somebody else, you're also going to have to invest in this new process. Not only do I have to change, okay, and I'm not sure that the change is going to, the evidence suggests that the change is going to be beneficial. The evidence suggests that, but I don't have personal experience, because the only thing I have personal experience with is what I've been doing. So now I see that there's evidence that this new way of thinking, this new way of doing things is going to be very beneficial to me, but now I've got to invest my money into it. That heightens the fear. That heightens the cognitive dissonance. Now I have to invest. And because they have to invest, they're saying, oh man, I've got to relieve this pain. I've got to relieve this fear. And there's two ways to relieve the fear. Invest and check out the new way of doing things, or decide not to do the new thing and stick with the old thing. Both will eliminate the fear. But too many of us fail to do the new thing, even though there's evidence that we would benefit from it, just because it's the familiar. It's the devil we know is better than the angel we don't know. And so, folks, what we're here for is not to cast judgment today, What we're trying to do is help people to understand what's going on with the mindset that we have, because the mindset that we have is a masterful implementation of a marketing campaign that is super successful from the banks. That's what we're suffering from. A marketing campaign that we are given this mindset, thinking that we're helping ourselves, and it keeps us in debt forever. Somebody is making a lot of money out of it, from it. But when somebody comes along and says, you know what, all that interest you just paid, listen, I tell people all the time, when I put together a program, let me give you an example of what I'm talking about, folks. I put together a program. We're going to go ahead and put this on the screen. I want to show you this. All right, let me get this out of the way. And we're going to put this on. We're going to put this on the screen over here, where it says, well, we got cognitive dissonance. I'm going to bring up Brett Whistle on the same screen. All right. And I want you to see this. I want you to see this. All right. And let me get this out of here. And I need you to see what's going on here. We're going to put in 350,000. Okay. And let's put it in at, we're going to keep it at 6%. Okay. Now, here's where I meet people. All right. They have a payment that they're comfortable with. And now, if you want to see this, folks, if you want to see what we're doing here, go to YouTube right now on a secondary device. And if you have YouTube, then search for P.I.L.L method. All right. And I want to share with you how cognitive dissonance gets in the way, even when the evidence is right before you. And this is a classic example. When I show you this, you will be convinced that cognitive dissonance is a real thing in our lives, and we should try our best to push past it. But first of all, I want to introduce the folks that we have on the stage after we take a quick break so that we can reset. You're in the P.I.L.L Method Club, and if you're not a member of the club, click that greenhouse at the top. We're talking about today paying off your mortgage in 7 years and learning to think like a bank, because we have been taught to be fearful, to stay right where we are financially with our current information on how finances work, so that we can continue to pay money to the bank. Here's one person who decided not to. I want to play the video for you because his name is Dr. Eric Thomas, and he found out that his family was fearful of, with the mindset that they had around money. No matter how much money you make, you can be fearful because of the mindset that you had. Let's hear what Dr. Eric Thomas has to say about the P.I.L.L method, and then we'll jump right back in.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Folks, here's a man started out and got to the point where he's making $50,000 an hour. Then he graduated to making $75,000 an hour. He has been paid by corporations up to $150,000 per hour, but his wife, with had that same mindset that they both grew up with, the mindset that what if it all goes wrong? What are we going to do? So instead of trying to deal with that old mindset, then E.T. Dr. Eric Thomas decided that he needs a new way of thinking about his money and a new way of thinking about debt. And when he did, he paid off his mortgage in record time by using interest cancellation techniques, using that program, the PIL method, using interest cancellation techniques, paid off the mortgage and all the other debt. And instantly, his wife said, "Oh man, that fear and trepidation is now gone." He says his marriage went to a whole new level because of that. So folks, there's going to be a benefit from changing your mindset when you see the evidence. So first of all, we have some moderators on the stage, and I want to start with Miss Donna, and then we're going to work our way down. I need you to go ahead and introduce yourself, Credit Goddess, and then Vernita. Let's go ahead and introduce yourself and tell the folks what you do. Go right ahead. Miss Donna, are you there?
I'm here running from downstairs. Good morning, everyone. Donna Anglin here. I'm located in Canada. I'm a longtime buy and hold real estate investor, specialize in assisted living, independent living, providing care for adults and seniors. You can check my bio for whatever I've missed. You could give me a follow on my IG, and I thank you.
All right. Thank you very much, Donna. Rose, are you there to do an intro? All right. She's busy right now. Rose, when you're ready, come back, flash your mic. Vernita, how are you doing?
All right, Grand Rising, Don. Always happy to be here. Hey, Donna, Credit Goddess, everyone in the room. Always appreciate the pill method. So I am Vernita Adele. I am your resident anti-racism speaker. I believe in Black people thriving. My platform is called America's Hot Sauce because Black people are America's Hot Sauce. And I love this topic this morning. I think it dovetails into conversations that you and I have had, Don. And as I have started on this journey to become debt free and to change my financial, the way I experience money, and my vision around it, and my behavior around it, it is so critical to this platform. When I talk about Black people thriving, and particularly Black people thriving as the antithesis to white supremacy, it has to be on all cylinders. It is Black people thriving 360 degrees, physically, mentally, emotionally, spiritually, definitely financially, culturally, and with our relationships. And so it's almost like I have started this quest. I have to make myself the guinea pig, where if I'm going to be able to best be in the position to help my community grow and thrive, I have to be thriving myself. So I am excited, as always, about what, Don, would you bring to the table to continue to grow with the pill method, and for anyone in this space, understand that it may be different from what you know, but it's like, but what I know is what got me here. So it's time for me to be able to be willing to expand my mind and see how I can make a change going forward. So that's my spiel. Bernita, unapologetically Black, and done speaking for the moment.
Thank you very much, Vernita. Credit Goddess, are you back? When you are back, please flash your mic. We want you to go ahead and do an introduction. So folks, on your screens right now, if you are in Clubhouse and you want to see what we're talking about, go to YouTube and search Pill Method on a secondary device, on your tablet or your laptop, so that you can see what we're doing. And we have a $350,000 mortgage at 6%, and the payment is $2,098.43. I want to show you what happens. I'm going to go down to 60 months. That's 60 months in. Okay, 60 months in, that's 5 years into this mortgage. All right, very comfortable. They were paying the mortgage, no problem. Everything was good. They thought they heard that what I could do for them is better than what they were doing on their own. But one of the things that we're going to show them that once that they've been into this mortgage for 5 years, making that payment, they've actually paid this mortgage down by $24,309.93. Okay, they paid their mortgage down by that. What they did not realize is they've already paid out $101,595.87 in interest. That is what they did not realize, got into the habit of making that payment every single month. And I mean, they got comfortable with it. I mean, do you see now how wrong that is, how painful that is, that there's something wrong with paying down your mortgage by $24,000, but you also paid out another $101,000 on top of that? Now, I want you to think about that. I want you to imagine I just presented you with this information. Do you realize when I show people this, that they see this and they're hurt? They are undone. Some of them even gasp. Some of them even say bad words at the time I share this information with them. I then show them there is a way to pay off the $325,000 that you still owe, the $325,000 that you still owe, and how to do it much cheaper. What if I could show you how to pay off the $325,000 that you owe, and you were supposed to pay the bank $405,000? You've already paid them $100,000. That means there's $300,000 left. I'm going to show you now how to pay off the rest of what you owe, and it'll only cost you $90,000, less than the interest you've already paid so comfortably. And I'm going to show you how you could do it with your current budget, pay only $90,000 to pay off $325,000 that you owe. Let me recap this. They already paid $24,000 down, and it cost them $100,000 in interest to do it. And they were comfortable until I showed them what happened. Then I went through what I go through here on a daily basis and prove that I can show them how, with their current budget, how to pay off the $325,000 that they still owe and only spend about $90,000 in interest. They've already spent $101,000 to pay down 24. I'm going to show them how to pay $90,000 to pay off $325,000. Do you realize that the cognitive dissonance here is so thick that they have to do something new to get to that place? Plus, they have to invest their hard-earned cash into this new system so that they can pay $90,000 to get out of debt in 5 to 7 years. Okay, so they can pay $90,000 in interest instead of the $300,000 they have left to pay, and they're going to get out of debt totally in 5 to 7 years on this new program, doing things differently. Now, this is a perfect setup for cognitive dissonance. I'm used to, even though I hate it, but I'm still in my house. Vernita, I'm still in my house. Credit Goddess, I'm still in my house. Donna, I'm still in my house, even though it cost me $101,000 in interest and I paid down my loan by $24,000. I'm still in my house. It's not working well, but it's working. Now you want me to do something completely different, a whole new way of thinking, and now you also want me to invest in it. But here's my benefit. I get out of debt in 7 years because I still have 25 years left on this 30-year mortgage. But now I can be out of debt in 7 and save $210,000 in interest I don't have to pay. But I got to do something new, plus I got to invest. The cognitive dissonance is so thick you can cut it with a knife. Do you know what some people do? What do you think some people do? They continue doing what they've always done so that the cognitive dissonance goes away. Folks, is that where you want to be? Is that how you want to be, to think about this thing? So what we're talking about, folks, is learning how to think like a bank. There's got to be people out there that are doing well financially by borrowing somebody's money, all right? And then we learn how to leverage it correctly, and we can do well. Are there any questions or comments about what we've gone through so far? Okay, so we've seen what can happen if we just get stuck into what the bank has taught us, so that we can be fearful about doing something different. Why does the bank want us to be fearful about doing something different here, folks? Anybody who's got a comment on why the banks want us to be fearful on what we're doing?
Don, if they keep you fearful, I mean, they'll continue making more money because they're going to always make money on your ignorance.
People make money on our ignorance?
For sure.
Oh my goodness. So listen, wait a minute. I've got books on my shelf on how to be successful. I've read Think and Grow Rich. I've read books by, Kiyosaki. I've read books by, other successful people in life. I've got these books on my shelf. I've read them and I've listened to them. All right. And they're telling me how to be successful in business. But I've never read a book on how to think like a bank. I've been told something else about borrowing. I've been told something else. I've never read a book on how to think like a bank and then how to properly use OPM, other people's money, how to properly use it and benefit from it. Oh my goodness. Let's get into this thing. Let's give you some evidence of properly using someone else's money. Now I'm going to put up this is not what we prescribe. I want to make that clear. This is just an example of how you can leverage somebody else's money. We're going to get down into, we're going to dig down a little deep on this. All right. But what I'm not doing is teaching this as a way of handling your money. What I am teaching is that there is a way of dealing with your money that can benefit you. There's some basic concepts here. All right. I'm getting ready to show you some basic concepts. I'm not getting ready to show you the P.I.L.L method, and that's what we teach. But I'm trying to use some concepts that we are familiar with so that you can understand how banking actually works and benefits the bank. I'm going to teach you by using these concepts how to think like a bank. So let's put this up on the screen. All right. And there we go. And all right, we're putting that up on the screen. And now let me get to the portion of this where we can start. I'm going to give you an example of how to think like a bank, pay off your debt in 7 years. And I'm going to give you a great example of what a bank does to leverage someone else's money. Okay. All right. So I'm looking for it. We're getting closer to it. And let's see here. Okay, here it is. I'm going to give you an example of leverage. If you want to see this example of leverage, if you want to see this, please go to YouTube on a separate device and log into YouTube and search P.I.L.L method. Okay? So we're going to take a look at, let me see here. How do I have this set up? And wait a second here. Okay, so here's what we've got. All right, let's put it on the screen. All right, folks, here's what I'm at. Here's what I'm looking at. Right now, I've got an amortization schedule on the screen, and it is it's a $200,000 mortgage at 6%. And what we're looking at is what if I were to prepay this mortgage by $19.53. If I were to prepay that, do you realize I knock off about 45 payments I never have to make the bank? And look at all the interest that I save here, over $40,000 in interest. So I'm going to prepay that. Now, again, this is just an example of what it would mean to get a great benefit from borrowing. I am not saying this is what we should do. All right, that's the caveat. What if we borrowed that money though? What if I didn't have it? What if I borrowed that money, the $10,000? What if I borrowed that $10,000 and put it on the debt? Let's see how that would work. Okay, so I'm going to borrow the money, apply it to the mortgage, and what it does is 45 payments, okay? 45 payments, pay down the mortgage with $10,000. All right, what's next? What can we see from doing that? Look at the amount of payments we eliminate and what the benefit is by applying that money to the mortgage. All right, so that is a total. All right. If I were to do this naturally, like the bank wants, it would cost me $53,959.50 to acquire a $10,000 benefit. If I were to do it the way the bank wants me to make 45 monthly payments. All right. So let's see what else we have here. Now, what if it were possible to pay this thing down by $10,000, all right, and in principle for less than $5,000 interest? Would you want to know how? Now, right now, to pay this loan down by $10,000 cost me $43,939.97. But if there was a way to pay this thing down for less than $5,000, would you want to know how? I need you, if you want to know how, put some number 9s in the chat, all right? If you're online, go ahead and do that. Somebody's trying to sell us some stuff online. Let's get rid of them. Let's block them out, all right? And if you want to know how to do this, how would you like to have an example of banking that benefits us because we're able to pay $5,000 interest instead of $43,000 interest? All right, Steve Mack's got a number 9 in there. Does anybody else want to know? Anybody else want to know how you can pay this loan down with your current budget for less than $5,000 interest instead of the $43,000 interest we just showed? All right, so here we go, folks. Here's just an example. This is not what we teach. Now, since every situation is different, we will use $2,000 as an example. Here's what I mean. The program works. Our program works if you have $1 left over or $21,000 left over after you pay your bills. So the basic theory is after this particular couple or person pays off their bills, they have about $2,000 left after all the bills are paid on average. Okay? So the basic theory of leverage is how small amounts of money can cancel huge amounts of interest. Keep that in mind. Keep that in mind. Now, what we're doing is giving evidence of thinking like a bank can actually help us better than thinking like a consumer. Okay? Thinking like a consumer keeps us in debt forever. Thinking like a bank helps us to benefit with a greater efficiency and efficacy. All right, here we go. Here's the example. After all the bills are paid, there is an average of $2,000 left over. Keep that in mind. And if you want to, if you have a question or a comment, raise your hand. Come up to the stage. Oh, I got 7 shares. This is going to be this is a huge example. I only have 7 shares. I got to have at least 10. Can I get at least 10 shares to get some more people in here so that they can see what's going on? All right. Now, here's what we're doing with our $2,000. All right. Here's what we're doing with our $2,000. James Frazier said, yes, let us know. He's watching us on YouTube. James, go ahead and share that to family and friends. Go ahead and share that YouTube channel to everybody so we can get more people here, even on watching us on YouTube. So we're putting away $2,000 a month in savings to build an emergency fund. Okay, this is an average $2,000. Sometimes it's a little less, sometimes it's a little more, but the average is around $2,000. Let's just say we did that, and after doing that for a while, we could have $20,000 in our emergency fund, wouldn't we? If we could do that, we could have this cash set aside, a $20,000 emergency fund. That wouldn't be so hard to do if we had an average of $2,000 a month left over, right? Okay, now what could we do then? Now let's apply $10,000. Let's take $10,000 out of our emergency fund. Take $10,000 out of our emergency fund. That leaves us $10,000 in the emergency fund, right? We still have $10,000 in the emergency fund. We're going to take $10,000 out of the emergency fund and apply it to mortgage principal. What? So if we did that, here's what we would do in just 1 month. We would make our regular mortgage payment, take $10,000 of the money we saved from the bank, apply it to the mortgage, and we are paid all the way down to line 45 in just 1 month. What happens as a result of this? Okay. When we pay our first mortgage payment and we put that payment, or we put the $10,000 on the mortgage, we're down to line 45. And next month, our payment is on line 46 of our mortgage, of our amortization schedule, not line 2. Taking $10,000 out of the bank, applying it here, okay? And we are now at line 45. Our next mortgage payment is at line 46, not line 2. I need you to pay attention to the number circled in red. That is how much interest we just saved by doing this. We just saved $42,988.83 in interest to do this. And our next payment is here, line 46. How powerful is that, folks? Is that pretty powerful? All right. Here's what else. I need you to take a look at this. Total interest saved, $41,988.33. Keep that in mind. We've saved $41,000, almost $42,000 in interest by taking $10,000 out of the bank and applying it here. Oh my goodness. Now, after $10,000 is applied to principal, how long should it take to return it to savings? Okay. Now, remember, we have $2,000. We got $2,000 a month that's left over. I just borrowed $10,000 from my emergency fund to apply to the mortgage, and I got a huge benefit for it. Now, how long should it take to pay myself back the $10,000 that I borrowed? Anybody? How long should it take to pay it back? All right. I see what you're doing, Michelle. Michelle, listen, you do what you got to do. All right. She wants to go ahead and see. So she's going to go to YouTube on her current device. That's okay. That's okay. All right. Or you can watch it later. All right. So here's so for those of you that know, it'll take 5 months to put that money back. I borrowed 10,000. I applied it to the mortgage. Now I want to pay myself back. It's going to take 5 months to pay myself back. And then I'll have that $10,000 back in my savings account. Now, when you use cash, okay? When you use cash, there's always a cost to doing anything financial. There's always a cost. What is the cost of saving $41,000 in interest I don't have to pay? There's always going to be a cost. She says, no, I want to stay here and watch it later. Okay, that's okay. That's quite all right. All right. But you'll be able to watch it later. All right. So here's what we're doing. Let's try to figure the cost on that. Let me give you an idea of whether you borrow it from yourself or you borrow it from the bank. Okay. Borrow it from yourself or borrow it from the bank. How much interest is the bank paying you on your savings account? All right. It's about 0.1%, but we're going to be generous with this example. Here's how generous we're going to be. We're going to pay 1% on $10,000. 1% on $10,000. Do you realize that 1% on $10,000, that's $100 for the year? Let's just say we lose the whole $100. Meaning, if I take $10,000 out of the bank, I lose the ability to earn $100 for that $10,000. I just lost that. So we're going to take that $100 and divide it by 12, which is $8.33 for 1 month. Every month, I don't have the $10,000 in my bank. I'm losing $8.33. That's if I'm making 1% on my money. Okay? That's if I'm making 1% on my money. We're not even making that, but let's just say we are. $8.33. That's how much I'm losing. Whenever you use money, whenever you do something, there's always a cost. And in this case, it's $8.33 a month. 5 months times $8.33 is $41.65 in lost interest cost. Lost interest cost. Okay? That's how much it costs. So now, what are we doing? Let's take a look at this. The interest saved is $41,988.83. That's the interest saved. Now we're learning the difference. We're learning what happens when we borrow money. Okay? When we borrow money. And the total interest cost is less than $41.65 because that's the money I would have made if I had left the money in the bank. Folks, how powerful is that? Now, I borrowed the money from myself. What if I borrowed the money from another institution? Oh, my goodness. Let me show you this. I'm going to put my amortization schedule back on the screen here. All right. Put my amortization schedule back on the screen. And I'm going to put in, oh, my goodness. I'm going to borrow that $10,000. Okay. I'm going to borrow it at 10% interest. Okay. I'm going to borrow it for 10% interest. I'm going to set it up for 5 years. Okay. That's 60 months. Okay. I'm going to pay them back. Now, remember, I have $2,000 left over every month, right? I have $2,000 left over here. But I'm still going to borrow this $10,000 for 60 months at 10% interest. And I'm going to apply it to that mortgage, which is 6% interest. So Don, you're borrowing you're borrowing at 10% interest so that you can apply $10,000 to a mortgage, which is a 6%. on the face of it, it doesn't quite sound right, does it? Okay. So here is what I need to know. How much is this costing me monthly? Here is my interest only payment, $83.33. $83.33. That's how much it costs me each month. Now remember, when I put that $10,000 on my mortgage, how much interest am I saving? Do you remember? $42,988.83. And how much is it costing me per month to use the bank's money? $83.33 in interest to use their money. My payment is $212.47. So, about how long, if I have $2,000 left over every month, about how long should it take me, even though I borrowed it for 5 years? If I wanted to pay it back fast, I have $2,000 left over. Would it take me about 5 or 6 months to pay the bank back? Let's just say it took a total of 6 months because I got to pay a little bit of interest, right? So let me put my calculator on the screen. All right, we're talking about cognitive dissonance. We're talking about thinking like a bank here, thinking like a bank. So I'm borrowing money from somebody, all right? And I got a big old benefit for it. I just saved almost $43,000 for that big old benefit and knocked off 45 payments I never have to make. I did that. And it cost me $83 a month. Okay, $83 a month. And let's just say, as I'm paying back the loan, you pay less and less interest. But let's just say I don't. Let's just say it's $83 a month for 6 months. 83 times 6 is a total of $498. That is the absolute most interest I would pay if I paid the bank back in 6 months. It cost me $498 to borrow their money. What did I do with their money? I leveraged their money. What did I get out of it? I got $42,000. Oh, let me put that back on the screen. I gotta put it back on the screen. I can't help it. Here's what I got for using that money. I got $42,988.83. Let me put my calculator on the screen over here. Oh my goodness. Let me put my calculator on the screen. All right. Uh-oh. I went too far. All right, boom. Let's bring this back. All right. Cost me $498 total in interest. To borrow money from the bank, I paid them back. But what did I get from borrowing their money? $42,988.83. Folks, does this make sense to you? I want to talk to the moderators that are still on the stage with me. Does this make sense how the bank is making money by leveraging our money? Does it make sense for us to start thinking like a bank? Is there anybody who has a comment on this right now? Anybody want to come to the stage and say something about this or ask a question? Listen, folks. We just showed an example of why it is important to start thinking like a bank does and stop thinking like consumers and being fearful of doing something new and exciting and beneficial for our businesses or for our families to leverage OPM the right way and get a big old benefit for it, because that's how banks think. All right, let me see. Is there anybody else? Somebody raise their hand that wants to come to the stage? All right, I don't see anybody. All right. Oh, there it is, Leland. All right, I'm sorry. Let us invite him to speak. All right, Leland, come on up. Leland, how you doing today?
Hey, good morning, Ice. No, I was just listening to you. If does that same principle apply outside of that first payment as well? Knocking it down like that. I know every month on that chart's different, but if you were like in your payment like 2 or 3 years, but you dropped $10,000, would it still drop that much on the interest like that?
It most certainly so it will remove as much interest as it's supposed to remove at that point. It
And then
it
whenever you get to the chart, you said you're at on the first payment. If you'd done it that way, you'd be on the 46 month on that chart, and then you would just continue to pay what the chart says after that.
Yeah, yeah. You would continue to pay what the chart says until you're ready. Now, if you could put that money back in 5 months, would you be eligible to do it again, Leland?
Oh, yeah, for sure. If you can do it that easy, then you could do it over and over.
Oh, so you're saying I could pay myself back in 5 months and do it again? Pay it back in 5 months and do it again?
So that's how you're saying you can do it in 7 years. Just repeat that.
Rinse and
Hey,
repeat.
man, that's genius. I like your thinking, boss.
Rinse and repeat, man. That's what we're talking about. Thinking like a bank. My goodness. I am so happy to be getting in here. This is our last show before Christmas. And I want to make sure people get this for a really good Christmas gift. And listen, if you want another, it may not come till after Christmas. All right. It may not come till after Christmas, but it's still a good holiday gift because people are doing their New Year's resolutions right now. If you want the basics of this information, why not get it in a book? All right. Why not get it in a book? Why not go to Amazon and search for the P.I.L.L method, a better way of eliminating debt. Buy it for yourself and give it out as gifts for people who are now developing their New Year's resolutions so that they can handle their finances much better, so they can learn how to think like a bank. Stop thinking like consumers. Learn how to leverage the bank's money a different way. Oh my goodness. I just love this. All right. So does this make sense? Does this make sense to you? The reason why we're here, folks, is to tell you the truth about money. Get rid of cognitive dissonance. Get rid of thinking like a consumer. Start thinking in a way that's going to benefit you. How to leverage somebody else's money at a much lower interest cost so that you can benefit greatly in the future. The amount of interest that you did not pay, you can use that money to invest in your family. Because the example that we showed before is that the bank wanted this family to pay $400,000 in interest on a $350,000 loan. We're going to show them how to pay a lot less to pay off the house. So the interest that you didn't pay, what if you track that? What if you say, I would have paid this, but I didn't. So now, why don't I just pretend to pay that to the bank, but I'll pay it to myself instead into my investment? This is what we're talking about. This is how regular people become millionaires by investing the money they would have paid the bank in interest. Oh my goodness. Is there, listen, any other, Leland, did you have any other questions or comments of what you've learned so far today?
Yeah, I did. Wouldn't it make more sense to do this method you're talking about versus paying the PMI as well? Because you would lock down more that way too. So all the money you'd put towards the PMI, just do like you're talking about. Or does that make sense?
Well, listen, there are people who have that idea, you know? So how do we we have to first think, what are we doing to get rid of PMI? All right. What are we doing to make sure we don't pay PMI? So let's talk about that for a second. So what ways, Leland, do you know of to eliminate PMI from our mortgage?
Well, just like you said, just pay it down faster. The more you pay, the faster you pay that PMI down. But I just got into a new home like on the 9th of this month, so that's kind of why I already told my wife this morning, go eliminate that chart. that immunization chart schedule right now at her work. So. But yeah, just pay it down quicker, and then you pay your PMI down quicker. So what you're saying is to do it.
All right. Well, listen, Leland, here's the thing. If you work on this on your own, you will definitely save time and you'll definitely save interest. But when you pay the right amount at the right time, do you want to save some interest or do you want to save the most amount of interest that's mathematically possible for you?
And that's all off that chart, right?
No, it's not.
So I need to get the book.
What you need is to get a computer that can actually do all the math for you and tell you this is the amount of money that you pay. This is the month you pay it in. This is the day of the month you pay it on. And here's which loan to attack to make sure you pay the least amount of interest.
And if it's not on that amortization chart, where do I go on the computer to find the exact month and what's the best
We,
month to attack that?
well, we wrote a computer program that's called an opportunity cost calculator that does all of it for you.
Okay, I need the link.
All right. So what you would do is go to PILLmethod.com, or I can put my link at the top of the page. I'm putting it up there now. Let me put my link up. ICE10K.com. All right. And we'll put that at the top of the page. So you can go to ICE10K.com, click that link, and there's a button that you'll find that says Get a Savings and Earnings Report. By filling out the financial form that will come up, all right, Leland, then my staff will take that information and then tell you the month, day, and year you could be debt free, not just on your mortgage, but all of your debt is paid off in an average of 7 to 9 years. Everything. We'll tell you the month, day, and year you'll be done and how much interest you could save by using our calculator. And I'm telling you, there's nothing on the planet more powerful than that calculator. You can save interest on your own. You can save time on your own. But the average person doing this on their own is going to pay about $50,000 to $70,000 more in interest than they need to because they did not optimize their movements. Make sense?
Oh yeah, for sure. I'm gonna get on there this evening and see what's going on the site and get that.
There you go. Because every time, Leland, if you have an amortization schedule and you pay, let's say you pay $1 ahead of time, that messes up that whole amortization schedule you just had. It's done for. It is no longer accurate for what you're doing now because it's changing. And because it constantly changes, and because the average client has about 13 different debts with 13 different amortization schedules, who's going to keep track of all that? It's impossible. There are millions of calculations that need to be done to figure out what to do and when. This is what the opportunity cost calculator actually does for you. All right. So let's get that going. And I would love to be able, since you got that mortgage, I would love to help you and your family get out of debt very, very inexpensively. All right. Let's not give all that money to the bank. So, and what we're going to do as far as the investment for the program is concerned, once we figure out how much interest you're not going to pay the bank, our program gets a small percentage of the interest you were supposed to pay the bank. So let's see how we can get your bank to pay my fee. And you have a lifetime program. How do you like those apples?
Hey man, that sounds good to me. I'm gonna get out there and check it out.
All right, man. So listen, if for some reason you lose the information I just gave you, just go to PILLmethod.com. It's there. There's a button in the middle of the screen that says Get a Savings and Earnings Report. There's 2 ways in which to find us. Any other questions or comments? Leland?
No, that's it for right now, but I will be in touch. I screenshotted all that and Googled and screenshotted what you told me, so I'll have it in my photo.
Excellent, excellent, excellent. All right, folks, listen, We put up a very good example of what it means to be locked into a mindset as a consumer, but doing something different. And we talked about borrowing money at a 10% interest rate to put on a 6% loan. And I showed not only is it beneficial, but it is way more beneficial than you ever thought possible, because now we're doing the math involved. Now, again, that's not the pill method. What that is just a way of showing how banking is done, how they can borrow our money, get a big old benefit for it, and pay pennies on the dollars for the use of it. So if I can borrow $10,000 to save myself $42,000 in interest and only pay the bank less than $500 to do it, isn't that giving them pennies on the dollar for using their money to save me $43,000 in interest? If you love that example, put a number 9 in the chat. If you love using the bank's money, turning the tables, giving them pennies on the dollar for the use of their money so that you can save tens of thousands of dollars even in just one move, put a number 9 in the chat if you just love hearing that this morning. Oh my gosh. There is nothing else like understanding what is really going on, is there? How you can think like a bank and benefit by leveraging someone else's money. You know what's good for the goose is good for the gander, right? So let me pull up my notes here. Let me see what else I can talk about this morning. Oh, there is a science. There's a science called behavioral economics. If you're interested in economics, then you want to read some books on behavioral economics. Behavioral economics. So let me see if I can put something on the screen for you here so that you can kind of see what's going on. Behavioral economics. Okay. Behavioral. All right, behavioral economics. All right, so let me put this on the screen. Move this over here. All right, there we go. And an introduction to behavioral economics. All right, the reason why it's psychology and economics combined. All right. So if I go back and then I put in behavioral economics books, here are some books. Now, here's some of them. I've actually read some of these books. This one, Misbehaving, I've read that book. Okay. Thinking Fast and Slow by Daniel Kahneman. Daniel Kahneman is a Nobel Prize winning economist. I've read his books. Nudge is by Richard Thaler. That is, he is another economist that is a Nobel Prize winner. And they deal in behavioral economics. And what they're saying, folks, is that human beings make, if left on their own, most of the time make irrational decisions about money. If left on their own, human beings make irrational decisions about their money. And do you realize the banking and those that they hire to do their marketing understand behavioral economics, understand what we would do if left on our own, and the very products that they offer to us take advantage of the fact that We are not naturally good economists. We will do things that are not rational when it comes to money. And people are using that information to make money. You want to get some insight into what we're doing? All right? Behavioral economics. I've also read this book, Predictably Irrational. Our irrational thinking about money can be predicted to the point where we're always going to lose money and the bank is always going to make money. They can predict how irrational we're going to be and then come up with ways of selling us their products in a way that we think we're saving money, but in fact, it costs us money. Oh my goodness. Behavioral economics, folks. You are, if you have any interest at all into what these books I recommend: Predictably Irrational, which I've read; Nudge, which I've read; Thinking Fast and Slow; and Misbehaving by Richard Thaler. All right. So these books are awesome if you have an interest. All right. So let's see what else we're talking. Leverages. Okay. Now we already talked about the opportunity cost calculator, but let me talk about this. Let me take all of this off the screen because we're going to wind things down for Christmas unless I get some more questions. But right now I want to talk about the new financial literacy. I want to talk about the new financial literacy. I don't want to zoom in on me so that we can do this. Donna, thank you so much, Donna. All right, folks, the new financial literacy has to do with how we can optimize the use of our money, the money that we're making, so that we can have more money for investing, have more money to enjoy, have more money to save, have more money available to buy the house that we need and the education that we want, have more money available to do the things that we need. And how do we do that? By minimizing the costs all the way around. Minimize your costs. Do you know that's why people clip coupons? They clip coupons to minimize their costs so they can buy more stuff. They minimize the cost. People who are in business minimize their costs. People who run restaurants. So if they're running a restaurant, they're going to minimize their costs. Do you realize that restaurants do not take advantage of all of the discounts that are available to them? Does anybody know why restaurants do not take advantage of all the discounts that are available to them when they're buying their food? Does anybody know?
Taxes?
Nope, that's not it. It's close. That's not it. Here's the thing. What if they could, because of the discount, they could get a great discount and knock a ton off of a pound of vegetables. Okay, they pay for their vegetables by the pound. What if they could get that thing so low they can get a truckload of vegetables, Leland? Why is that not a good idea? Does anybody know? Why is it not a good idea? She says it would spoil. As Michelle says, it would spoil. You're right. So this is why we can't take advantage of all of the discounts without understanding what the benefit would be. So listen, I can get a whole truckload of vegetables at this price and then lose money because of waste, because it would spoil. Folks, we have to understand money that is in a way that's going to benefit us and stop thinking like consumers and start thinking like a bank. What banks do is that they optimize the use of all of their money so that they can pay the least amount of money to borrow your money. Do you know banks have gotten so wise that even though they pay us pennies on the dollar for the use of our money, do you know that they found a way to get that money back from us, the money that they pay us? Do you realize they found a way to get that back? And they've learned how to borrow our money for less than free? Does anybody know how banks borrow our money for less than free? So, Don, what could be less than free? How do banks borrow our money for less than free? Anybody know?
Membership fees.
Oh, there you go, my man. That's what we're talking about. So they pay us a little bit of money to encourage us to get in there, all right? But then they charge us fees. So not only do they get the money back that they paid us, it costs us money to keep our money in the bank so that they can make money with our money. We have to pay them. Lord have mercy. So that they can use our money to make money with. Man, oh man. Listen, if that doesn't want to make you turn the tables around so that you can get it so that banks can pay you to use their money. Does anybody know how we can get the banks to pay us so that we can use their money? Who's got an idea about that? Anybody? Come on now, this is good stuff. Who's got an idea of how to get the banks to pay us to use so we can use their money? Does anybody? Come on. I know you know.
That method you talked about.
That's one way. That's one. Steve Mack says equity. That's another way. We can get equity faster and cheaper. That we can get banks to pay us through the equity we receive. Is there another way? Okay. Using the P.I.L.L method. That's what Leland said. That's another way. Does anybody know of another way that is so common, it's right in front of us, that we can get banks to pay us for using their money? What about credit cards that have benefits that pay us in either cash or miles so that we can get great benefit for using someone else's money? Does anybody use credit cards so that they get their benefits for free? Cash back for free? Miles for free? Does anybody know how to use credit cards that way? Have you ever done that? All right, let me take a look here. Reward points. Donna England says, yes, she has. Listen, folks, there are so many different ways so that we can use the bank's money so that they will pay us to use their money so that we can get a big old benefit. Now, I'm going to show you something. I'm going to show you something in the last few minutes here. I'm going to show you something in the last few minutes that you may not have noticed before, that this is something we can do. All right? I'm going to show you something in the last few minutes. So let me put this on the screen. And I've got some examples here. I got this as an example. We're going to put this on as an example, and this on. And what else do we have? Okay, we got this. All right, so we're going to open these up. All right, here's my crowning example, folks. We have spent a lot of time here. All right, we have we have about 18 minutes left in our show today. And we've talked about leveraging the bank's money to save us money. We've talked about leveraging the bank's money to make money. But now let me talk about leveraging the bank's money to make a whole lot of money. Let me show you some examples of this right now. And here's one of them. I want to talk to you about the concept of a virtual 0% mortgage. The concept of borrowing money virtually for free to buy your house. Anybody want to know how that works? Huh? I need some number 9s in the chat if you want to see this. In the last few minutes we got here, here's my Christmas gift to you, is how to, we're going to learn how to borrow money for free. And not only that, but to make money buying a house. How do you make money borrowing money? Leland says, "Oh God." Jeffrey West says 9. He put a 9 in the chat. Do I have number 9s online? Do I have some? Oh, Jeremiah Sam says yes. You've got months. Okay, there we go. All right, James. Thank you very much for making your comments and answering those questions. We appreciate you, James Frazier. All right, and listen, we've got more people. Listen, the 9s are coming out of the woodwork. All right, let me give you an example of what I'm talking about. And I need you to zero in very closely in the last 16 minutes we have left in the show. Okay? 16 minutes left in the show. We're going to learn how to make money here by using the bank's money. All right? I don't want that. I want to get this out of the way. All right? Where did that? Come on now. There it is. All right. So here's what we're talking about, ladies and gentlemen. How to make money using the bank's money. I love this with every fiber in my being right about now. This is what we're talking about. Do you see this example on the screen? Let me bring this up so I can see. I need to see as well. There we go. All right, there we are. All right, so on this example, this person has a brand new mortgage of $204,000, $204,000 for 30 years. In the first 5 years, this is what they were going to do if they were not working with us. They would pay their mortgage down by $18,675.20. Do you see how much interest it would cost them to pay down their mortgage by $18,000? It would cost $37,325. That's how much it would cost them. To pay off the entire debt, doing it the bank's way at 4%, it would cost them $143,000. That would mean that they would be paying back 71.87% of what they borrowed. Using the P.I.L.L method and leveraging their discretionary income, the monies that they could put in the bank after all the bills are paid. We're going to show them exactly what to pay, when to pay it, how much to pay, which debt to attack, so that they could save the maximum amount of interest using our opportunity cost calculator. They're only going to pay out $41,408. Let me show you what's going on here. They could pay $143,000 the way the bank says, $143,000, and then watch this, pay off the $204,000 in 30 years. That's if they finish in 30 years. 9 out of 10 people will never pay off a mortgage. Okay, but watch this. Or by using the P.I.L.L method, they can pay everything off and only pay out $41,000 to manage their debt, pay off everything in 7.5 years. Now, what would happen if they took the money that they had planned to spend for the next 23 years? The interest money. put it into an investment, making only 1% return on their money, and make $815,000 with it, using the money they were paying to the bank, and now they're not. Use that money. Pretend you're continuing to pay those payments to the bank, but pay it to an investment that only pays 1% interest on your money, and turn it into $815,000. Folks, this is more money made than they've ever paid in interest in their entire life. The average family pays somewhere between $300,000 and $450,000 in interest on their lifetime. How would you like to put yourself in a position where you could essentially say, all my loans, I got more interest back than I've ever paid out, which is better than a 0% loan, because now you're making more money than you've ever paid. If this makes sense to you, put a number 9 in the chat. Put a number 9 if it makes sense to you. So if I could pay this off and only cost me $41,000, and I could take the money that I would have paid and invest that money and turn it into $815,000 at 1%. What if you could get a better interest rate than that? Oh my goodness. And not turn it into $1,000, but $800,000, but over $1 million. Here's another example. Somebody made, we showed them how they can turn it into $600,000. Okay. Here's a commercial example. Instead of paying the bank $1,123,000 over 20 years, okay, $1,123,000 to borrow $2.2 million in their real estate investment, instead of paying $1 million in interest, how about only paying $231,000 in interest? How about that? Take that money that they would have paid and turn it into $9 million at 1% return on their money. Folks, this is what we're talking about. If you want to think like a bank, if you want to really think like a bank, not only do you want to save money and interest, not only do you want to pay off all of your debt in 7 to 9 years, you want to take the money that you would have paid the bank and then turn it into profit for you, so that it turns out that when you subtract the amount of money that you've paid in interest from the money that you've made in interest, it is a virtual 0% interest. It's like a negative number now. Okay. You're going to make more money in interest than you've ever paid. Think like a bank and start making money using the bank's money. Use the bank's money and turn it into a profit center for you. This is what we do for our clients. This is our Christmas gift to you. All right. So we're getting ready to get out of here. But make sure you at least get the book today. Go to go to Amazon and get the P.I.L.L Method book, A Better Way to Eliminate Debt. Get that book today. Also, to get a savings and earnings report, just like I have here. Watch this. This is our savings and earnings report. If you have a desire to save money to pay off your mortgages and student loans and everything, all right, and then save a lot of money and then use that money you would have paid in interest to turn that into wealth building for your family, get a savings and earnings report today as well. Go ahead and get it. And once you do that, folks, you're going to start realizing that we can do this for ourselves. The bank has been doing it. Why can't we do it? Why can't we turn it around? So, folks, as you're thinking about this, don't let anything get in the way. Don't let cognitive dissonance get in the way. Don't let fear get in the way. And some of you are even inspired to want to help us get the message out. If you want to help us get the message out, I have added something new to my 10K card, ice10k.com, ice10k.com. If you will go to ice10k right now, go to the link, all right? Right now, go to the link and pull it up. You'll see two buttons. Become an affiliate of the P.I.L.L method. Fill that information out. And that's all it takes to become an affiliate with us. And then, if there are people out there that you know that are tired of doing what they're doing and they want to do something different, to pay off their debt, to think like a bank, to make money instead of giving the bank all of their money, then direct them to our YouTube channel. Have them watch some of our videos and then follow up with them in a day or two. No more than 2 days. In a day or two, follow up with them and ask them, do they resonate with this information? Does it make sense? Do they want to know more? If they say yes, then fill out that other button to the right of that. Refer your family and friends to the interest cancellation expert. Refer your family and friends to the interest cancellation expert. Put your name in as the referral. Send their information to us. We'll take it from there. Okay? And then we will pay you for every client that comes on board. We will pay you $300 for every new client. Folks, you send us 5 people a month. They become clients. That's $1,500. Oh, but don't stop there. We can also talk to you about, once you become an affiliate, just let us know that you want to talk to us about how to make that $300 into $1,000 per client. We can show you how to do that as well. Okay? 5 clients there, that's $5,000 a month. Oh my goodness. How do we do that? It's right there on my 10K card, ice10k.com, ICE, the number 10, the letter K.com. This is for the new year, but you can start now. You can start now. We're going to be doing this all next year, bringing on new affiliates just to share. And we do it this way because people cannot go to our website and purchase. Everyone must do a savings and earnings report. So when you send them that referral, it gets locked into your file. When that person becomes a client of ours, you get paid. And when and then one of the things that you'll click on to become an affiliate is how you want to get paid. Because you just click the button that says Cash App, Zelle, Venmo, PayPal. Figure out how you want to get paid for sharing this valuable information. Folks, I want to thank everyone for being here. I want to wish everyone a Merry, Merry Christmas. Do we have anybody on stage who is a moderator who wants to do an outro? Anybody available for an outro this morning? There you go. All right. So folks, here's what we're going to do. We're going to say goodbye to everybody online first. Okay. And then we're going to come back and do our outros. So folks, right now, you want to, if you're online, get with Credit Goddess. We put her information up there. Vernita, we put Donna's information up there so that you can see who you want to do. If they have a business or a service that you have in need of, contact them. All right. Hit me up on the back channel or send me a message if you want us to send you over their information. But folks, we want to hear from Dr. Eric Thomas one more time before we leave. All right. Before we leave, Merry Christmas to you. Become an affiliate. All right. Get your savings and earnings report. Buy the book. There's so much value in this room. It's not even funny. All right. Merry Christmas to you all. All right. We're going to say goodbye to everybody online. Here's Dr. Eric Thomas. Bye bye.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.